Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at the hour. There's no end to the fall in the rupee. The currency scales an intraday low of 72.85 against the US dollar. Weakness in the rupee is reflected in the markets as well. Both the Nifty as well as the Sensex fall over 1% in intraday trade. The Nifty trades below the 11,500 mark. And Axis Bank is among the few Nifty gainers after Amitabh Chaudhary is picked to be the next MD and CEO of the lender. And finally, the RBI initiates a special audit into junk-rated RLNFS after it fails to repay SIDBI. All group stocks decline close to 10%. That's a Bloomberg Quint exclusive.
Well, thanks for that, Devina. Viewers, thanks for tuning in to Countdown. My name is Neeraj Shah, and the markets, well, pretty much at the same levels that they have been for better part of the trading day today, down in or around that 1% cut. So 106 points off for the Nifty. The Sensex not look all that strong either. The Nifty Bank too, correcting 0.8%. So you could argue that it's done a little bit better than what the Nifty and the Sensex have, but that's only marginal solace, to be honest. The mid caps and the small caps will come up on your screen as well, and about 1.5% down for the Nifty mid cap index too. It's not a bloodbath, but there is weakness on the screen for sure. Just bring up Europe once before we go over to what's happening in the Nifty individually. And Nifty components, that is. And Europe is not that bad a place. So the world markets not in a tizzy at all. Let's see the kind of impact that these have on our markets starting tomorrow morning. But the Nifty heat map should come up on your screen. And let's just show you what's happening. It's almost the same kind of picture that we had at the start of the trading day, just that the nature of the components has changed a little bit. So Bajaj Finance, Finserv, Sun Pharma have now taken center stage in terms of the top losers. All marketing companies have looked weak, principally on account of the rupee weakness, I would add. So BPCL, HPCL have looked slightly weak in trade today. Vedanta amongst the commodity names that have corrected as well. So a lot of weaker hands. What's gained? Axis Bank. So that name still stays at the top of the trading peak. Throughout the trading day today, it's Axis Bank which has stayed as the #1 gainer in trade. So that is doing okay for itself. Some IT companies, the likes of HCL Tech and Infosys, are doing okay. HCL Tech, in fact, carries on from where it left off last week. Remember, last week, Wipro and HCL Tech, the two laggards, were doing well. In today's session, to HCL Tech is doing reasonably okay. And last but not the least, some good move in Tata Motors, despite the retail sales numbers not looking the strongest in the recently released data. So, well, this is as far as the large caps go. Frankly, it's got to do with some NBFCs and select other pockets in the commodity space looking slightly wobbly. What about the broader markets, Devina?
Well, it looks like the same, Neeraj. Actually, there's pain across the board, though we have seen a slight bit of a pickup from the lows of the day. But taking a look at a few stocks and the trends that we're picking up. So RLNFS Transport is one stock, that is seeing pain on the back of what's happening to the group company, the RBI audit out there. So the stock's down in double digits, 11.5% now. Max Financial Services sees an uptick of about 7.5%. Now, post the appointment of Amitabh Chaudhary to Axis Bank, there are murmurs on the street that they may look to venture into the life insurance space, and a group company there, Max, and the subsidiary there, Max Financials, is seeing some bit of excitement on the back of what can happen with Max Life. Aside from that, RITES, it has got a railway contract of about 300 odd crores. The stock sees a move on that front. Strong gains are coming in the Hathaway cable. This is the third straight day of gains on the stock. We saw on Friday's session, the stock ended with gains of 9%. In intraday trade, again, Hathaway cable has seen an uptick of about 9 odd %. Volume gainers, you're seeing a stock like VMart. You've got Honeywell Automation. The stock has traded about 1.4 lakh shares in intraday trade today on a good price move as well. So 3% higher on Honeywell. And you've got Cafe Coffee Day, trades about 9.6 lakh shares, and the stock has seen a move of about 5 odd %. Among some losers in trade, you've got a stock like Jubilant Life Science. Remember, on Friday's session, Jubilant was up 7%. It's giving back a little bit, so 1.5 odd % lower for Jubilant. You've got a Torrent Pharma and a Prison Cement also, which is looking weak in trade today. But there's a lot to be watched out for from the F&O space as well, and what stacks up as we head into the last 1 hour of trade. Agam is joining us with the highlights of that. Agam.
Well, Devina, I have more losers than gainers, as one might expect, but I'm going to start off with the benchmark indices. At this point in time, when it comes to the Nifty futures, we're seeing accumulation towards shorts, considering a rise in open interest for the Nifty futures. As you can see, about 3.5% increase there. When it comes to the Nifty banking futures too, the trend is not, well, unlike what we've seen for the Nifty. In fact, this time around, we have a near 26% increase in open interest. The India Volatility Index has surged and has moved about the mark of 15. It's up as much as 8% at this point in time. Well, needless to say, the most active options are around the 11,500 mark, considering the fact that we have seen the Nifty come off and below that mark right now at around 11,470 odd, and we have seen unwinding in that 11,500 put, whereas we have seen more writing around the 11,600 and the 7,700 mark. In terms of stocks, there's just one stock which stands out, and that's Max Financial, which is bucking the trend. We're seeing a longs at this point in time, considering an increase in open interest of around 32%. But on the losing end, we have substantial weakness in Torrent Power, which is down, and there's 23% added towards shorts. Berger Paints is the other one, which is also declining by around 3.5%. And Manappuram Finance is also starting to see some activity towards fresh shorts building in. So these are some of the stocks which are bearing down on the broader markets at this point in time.
Yeah, thanks for putting that into perspective. Well, it's Monday. Let's time to get in a global perspective, and let's get Chris Watling of Longview Economics. He's joining us right now on the show. Chris, good having you. Thanks so much for joining in. The narrative seems to be a bit unclear. While Donald Trump in Friday or the weekend rather on Air Force One or otherwise did vociferously say that he's ready with another $267 billion worth of goods on which tariffs can be levied. We haven't seen any concrete action as of now. What do you reckon happens over the course of this week, and what kind of impact could any material action have on sentiment or otherwise for world markets?
Well, I mean, he's clearly upping the ante, isn't he? Talking about another 267 billion of tariffs following the 200. And he's trying to apply pressure to the Chinese to come up with some sort of response that he finds acceptable. So I think it's classic Trump negotiating tactics. It's clearly not a positive for global markets. Clearly, China's under a lot of pressure. The Shanghai comp was weak again last week in China, weak Chinese equities. And I think the tariffs are adding to the mini credit crunch that's already going on in China. I mean, China's trying to deleverage at the moment, and they're dealing with a very difficult economy where liquidity is tight, and more tariffs doesn't help. So Trump is playing his hand, and this isn't helping global markets. Although I would say that I think the Fed is probably the thing that's putting emerging market equities most under pressure in the world, more so than the tariffs. But the tariffs clearly don't help.
Chris, good afternoon to you. I mean, while we have been seeing the prospects of additional tariffs looming large, weighing down on sentiment, however, the data that's coming out of China seems to suggest otherwise. So you've got them at a record trade surplus to the US of $31 billion. Do you see, this probably giving a little bit of a silver lining in terms of the data footprint that's been coming out?
Well, it's a small silver lining. I mean, what it says to you in some ways is, import growth into China isn't very good. Export growth is good. But don't forget that we've only just put a mere, I think, $50 billion of tariffs on to Chinese. The US has only just put it on. So there's not much being put on. It's only just been put on. And imports in China are probably weak because the economy is struggling. So, on the export side, it's only just starting to feel the effects of tariffs, if at all. And on the import side, it's reflecting a weak domestic Chinese economy anyway. So a widening trade surplus in that sense is actually not surprising, but of course doesn't help in terms of the negotiation. It's a number that Trump can latch onto if he wants to up his rhetoric. So yeah, I mean it's really a lagged effect that you're seeing there. And I expect that over the next 6, 9, 12 months, if the tariffs come to bear, that dynamic will change.
In light of all this and what's been happening to crude oil prices as well, do you believe that global investors are steering clear of the emerging market equity basket and sitting on the sidelines waiting for an entry point?
I think the main thing driving global investors out of emerging market equities, the main reason they've been selling is because of tightening global liquidity and a tightening Federal Reserve policy. So the shrinking of the US central bank's balance sheet, the increasing of the Fed's interest rates, and indeed their resoluteness to continue increasing. This is not something they look like they're about to stop. You hear comments over the weekend, they seem pretty clear that they're going to continue in raising rates. So I think it's tightening global liquidity. If you look at global M1 money supply growth, it's growing at its lowest level since 2008. So money's tightening up in the world, and generally when that happens, the first thing that sells off in equity market land is the emerging market equities, as some of the higher beta equities out there. So, you know, tariffs adds to it, but really it's about the Fed, it's about global monetary policy tightening, and it's about a slowing of dollar liquidity out there that's affecting these emerging market equities at the moment.
How closely do you track India, Chris?
Sorry?
How closely do you track India, if at all?
India, a little bit. You're certainly watching the currency and the stock market and so on, and the economy to a degree.
So I'm just wondering, does, you know, the narrative that most people have said that if in the event of trade war taking center stage, India would be a lot better off than some of the other economies simply because of the less dependence on external trade as opposed to the kind of dependence it has on the domestic economy. If this were to turn out to be true, that is the higher narrative of trade war takes center stage because of whatever Donald Trump would do or could do this week, would India stand out? The GDP print that came out recently is not too bad either. The macros notwithstanding, the other things seem to be okay.
Yeah, I mean, I've always said India is a very autonomous growth unit. It doesn't get caught up so much in the global winds of economic growth as China does and Europe does and so on. And of course, it's not a very open economy, unlike many of the emerging market economies. So it's less impacted by global trade growth as well because of that. So, yeah, I think India could stand out. It has its own economic cycle underway. The thing that would worry me is what happens to the oil price, of course. That's one part of the global picture that India really is affected by, as you well know. So, but in terms of its own growth, domestic growth, yes, I think it absolutely could stand out in the case of the tariffs picking up and the trade war picking up, and also it's less of an issue for India with the States and Trump than it is for China and some of these other emerging markets.
Do you expect the dollar to continue its upward stride, Chris? And in light of that, what do you expect emerging markets to do, emerging market currencies to do?
Yeah, we think the dollar's still in a bull run. I'm not convinced it's got an awful long way left in it, but I do expect the dollar to peak as we see a sell-off in global equity markets sometime over the next 1 or 2 months, or certainly by the end of this year. So I think global equities are poised for a major sell-off, a bit like we saw in the second half of 2015. And I think if we're correct and we get that, then the US dollar will peak out at that time, and Fed interest rate expectations will change, and we'll start to see a little bit of dollar weakness as they try and move towards trying to reflate the global economy, which I think will struggle if we get a bit of volatility in global stock markets, and that downside that I expect over the course of the next few months.
Just wondering, would you put an approximate percentage level to the downside that you anticipate? By world markets, I would reckon you are referring to the US and not necessarily everything else, but is there any estimate that you have?
Yeah, I mean, if you look in stock market history, every 3 years or so, after a phase of tightening by global central banks and the Fed, you tend to get what I call a sort of global macro shock type equity market sell-off. So the last one, as I said, was in late 2015. We had one in 2011, 2012 with the Euro crisis. Then, of course, before that to the GFC. And 2004 as we consolidated interest rate expectations rising in the States. So you can go back all the way to the 1970s and beyond. Every 3 years it tends to occur. We've got the backdrop now. We've got the tightening global liquidity. And when you get that type of event, the S&P tends to sell off 10%, maybe 15% maybe even a little bit more, and everything else that's higher beta tends to sell off a little bit more than that. So, you know, I think S&P down 10% by Christmas time is perfectly plausible.
All right. Chris Watling, thanks very much for joining in. Really appreciate you taking out the time and speaking with us. That's a global view coming in there. Let's quickly take a look at our markets then and focus a little bit more on what individual stocks are doing. Bajaj Finserv now the worst performer on the index, and the index once again dipping lower. So we actually had seen a slight bit of a perk up, but now once again at the lowest point of the day. Bajaj Finserv, it's down 3.7%. Sun Pharma, being a defensive in the lot, is also seeing some pressure, 3.3% lower. BPCL is down 3%. So heavy cuts coming in across the board for some of the Nifty members out there. Vedanta is down 2.5%. M&M is down 2.3%. Hindalco is down. And focus on what's been happening to Axis Bank. The stock actually in pre-open trade saw an uptick on the back of the new appointment of Amitabh Chaudhary, but the stock so it's probably the one that's bucking the trend there. 656 on the stock, 1.6% higher.
Yeah, well, and a couple of other stocks. I mean, I'm just looking at the pharma pack at the list of the all-time highs. So GSK Pharma 2.5% trading at life highs. Sanofi about 1.5% trading at life highs. Lincoln Pharma about 0.5% trading at new highs. So select pharma names seem to be doing well. Never mind what Sun Pharma is doing individually, but there are a bunch of pharma names which are doing okay for themselves. On to a big Bloomberg exclusive. Tata Sons chairman N. Chandrasekaran talks about the plans of consolidation amongst the Tata Group companies and why he wants to make the Jaguar Land Rover a financially sound company. Listen in.
The group has a very strong history. So we have a large number of companies and we are in many sectors, primarily because the Tatas went into businesses which were needed to build India. So I think the way now we have looked at our group is we are going to be in 10 different segments. So all the companies are operating through these 10 different segments. So we have done some of those consolidations. Some will be real consolidation, some will be not really a consolidation, but will be under particular vertical.
And when you're through, does Tata look more like a holding company, a kind of a Berkshire Hathaway style company that owns investments?
I think you can't model the Tata Group vis-a-vis some other group. I think the way to look at it is that we have 3 big companies, which is auto, steel, and IT. Mm-hmm. Then we have a big vertical in financial services, and there will be a big vertical in consumer and retail. Then we have a big vertical in infrastructure, and there's a big vertical in defense and aerospace. For example, defense and aerospace, we are trying to consolidate everything into a single company. And then we have tourism sector. I think broadly that's the themes, and some of those verticals are one company verticals, and some there will be 2 or 3.
Your recent results showed a pretty strong jump in profit. What's driving that? Which of these verticals is really driving it?
I think all our companies are focusing both on growth as well as on profits and cash flows. And TCS has done remarkably well and continues to do very well. And Tata Steel did very well last year. Mm-hmm. And in Tata Motors, apart from Jaguar, our Indian business has also started to deliver profits. And all our retail businesses are doing incredibly well. So.
Jaguar Land Rover, unfortunately, a kind of a dark spot in your results. What's going on there? How to turn that around? I think
the way to look at Jaguar Land Rover is, I think it's a pretty strong company. Over the last 10 years, they have really done very, very well. And that industry is going through 3 or 4 major, I don't want to call it headwinds, 3 or 4 major things going on there. One with respect to technology, because shared mobility is becoming real, and electric vehicles, autonomous cars and so on and so forth, and Dieselgate.
Right.
Then for them, because they are in the UK, they don't know what's going to be the outcome of the Brexit and what's the resultant trade agreements are going to be. So there are 3 or 4 things all happening at the same time. So they are having to deal with all of this, and they're going to be looking at products for different markets, and also at the same time, right, capex allocation between different platforms. Do you want to go EV? Do you want to grow hybrid in this platform, etc.? But the focus is definitely on ensuring that financially the company remains strong.
So would that be on a potential list of things you might sell?
No, not at all. No, we believe in that company. I think we have strong belief that the company will do well. So we want to make it financially stronger.
All right, back to the markets then. An Indian overseas bank has raised its marginal cost of funds-based lending rates by 0.05% or 5 percentage points. Let's go across to the management who's joining us right now on the phone line, the MD and CEO, Mr. R. Subramania Kumar, to talk about the same and lots happening at the bank. So thanks very much for taking out the time. You know, you've raised your MCLR rates, 1-year MCLR, to about 8.7% versus 8.65. Do you see a further increment ahead of the RBI meet?
We may have to wait. The ALCO takes a call, taking into consideration the changes which are happening around. And primarily it is driven by the cost of the funds which we raise from the market. If you look at it, we have a strong CASA base, which is one of the reasons that we are able to peg it down to around 8.7 as of now. And we have to wait for RBI to come with their views, and then we'll take a call. ALCO will take a call.
All right. So the other bit of news regarding this would be the RBI note to exercise your call options on bonds worth about 655 odd crores. What does that do, and what kind of an impact does it have on the capital adequacy ratio?
See, if you look at it, it may not have a big impact because already the Tier 2 bond, which we have exercised the call option, has reduced from 600 plus to around 200 plus. So at the maximum, it will have a very marginal impact on my Tier 2. Already, if you look at the Tier 2 bonds, it's more than 2%. So it may not have a big impact as far as the CRA ratio is concerned. And if you look at the bank's balance sheet for the last 1.5 years or 6 quarters, we have been consistently reducing our risk-weighted assets from that of 112% to 89%. And you would have definitely observed that the total asset size, hovers or remains around 1.5 trillion INR, as it used to be from 6 quarters before. That means we were able to rebalance our credit within these portfolios, and that's one of the reasons that we are able to manage our risk weight. So while holding that, the denominator factor continuously, we are focusing on other areas so that we are able to increase our operating profit. When the operating profit, if you look at it, in last June, we made around 45% growth. And if you look at the previous quarter also, we were able to maintain the same, despite having a pressure on our NPA. Despite all these things, one of the major contributing factors for us is that we are able to peg our loans. The rebalancing of the RAM, which was around 54% the year before, now it is around 66% of my total credit book. That's one of the reasons that we are able to have a balanced book. And as we move forward, we are confident that we will be able to sustain this.
With the likelihood of the RBI, further increasing rates till the end of the year, what do you see the movement of rates to look like in terms of the trajectory?
Going by the inflationary pressure and other things, I feel that there may be some pressure which is coming from RBI, as many of the pundits are predicting it. And some more data is to be collected, and still some time is there for around a month's time. The things may change. We have to wait and see for the data to come in. We're looking at the Rupee is more or less stabilized, and that's what we hear from all the people, and there's not much of an impact. With all these things we have to wait for the data to come. Maybe by end of this month, we may be able to get some better view about it.
So going forward into the current quarter, you had said that you expect recoveries of about 950 crores in the current quarter in your 4 NCLT accounts. What's the status on that?
The thing is that it indicates that we may be in a position to get it because, of course, this is subject to NCLT and NCLT is approving it. But the way we have been seeing it, even in respect of your SR, you see that a lot of changes, we are likely to get some information tomorrow. And the related matter of SR itself, it is very clear. NCLT has given that National if he has to participate, he needs to clear some of these debts. So those things are likely to happen. So we are hopeful that the projection of ours for 900 plus will happen this quarter.
Last question, sir, regarding your, your NPA levels and how far do you think you can get an improvement on that?
One thing is that if you look at it last year, Q1, Q2, Q3, we were consistently reducing our NPA and we were moving towards the projections what we did for March. But these RBI's directions of stopping the restructure has only tilted the entire thing, and which we have recognized all those accounts which are otherwise. And even if I look at it now, we have moved from almost, I'm trying to recognize NPAs on a daily basis so that at the end of the quarter, I'll be able to upgrade a considerable number of them, which is one of the positive factors. I'm last 2 quarters and 2 months, my recovery is on track and we are able to make a recovery the way we have been projecting it. And we are confident that we will be able to, the gross NPA in terms of quantum will be lesser.
Got that. So thanks very much for joining in. Really appreciate you taking out the time. That's the management at IOB talking about the recent MCLR hike as well as the business prospects.
Well, so that's one. And by the way, just looking at what's happened to some of the financials today, I was just looking at what's happened to NBFCs because there were a couple of brokerage notes that came out. One of them was Elara Capital, which has gone out and upgraded a couple of names. But the other interesting one is what's happened to the note that came out from the table of Credit Suisse, when they mentioned that companies like JM Financial, IIFL, Aditya Birla Capital are amongst the companies that could see a higher impact on funding costs because a higher proportion of borrowings are coming up for refinancing over the next 1 year. So, well, all of these have come off. IIFL Holdings in particular, having not seen a correction compared to the peer group in the recent past, has corrected quite strongly today, down about 5% at 657. Could there be more in store? It remains to be seen. But for now, IIFL Holdings certainly falling in trade. Wonder what Edelweiss is up to. Remember, Motilal Oswal has been taken to the cleaners over the last 12 months for a lot of other things, including the slightly patchy performance as a stock. But Edelweiss too, correcting about a couple of percentage points in the session today. But the one that was holding out, remember, was IIFL Holdings, and that stock has come off in the session.
Actually, for Edelweiss, Neeraj, since it's reported its numbers, the stock has actually just either been languishing within that range or probably, like the rest, seen the cuts that it has in company.
Yeah, completely.
So 300 as a figure that we saw sometime back that does not seem to, have been taken on again. But
yeah, completely. And maybe now some pressure points showing on IIFL Holdings, which was holding out compared to some of the others. Some pain points there. Anyways, 2:30. So that's about some NBFC stocks. We'll talk more about these, but good time to get in our experts to try and figure out what to do in a scenario like this in the markets, because we're trading right now at the lowest point of the day, about 150 points down for the Nifty. Hemen Kapadia of KRChoksey Securities, as well as Sumeet Bagadia of Choice Broking with us on the show. Gentlemen, both of you, good afternoon. Thanks for joining in. Hemen, suffice to say, it is not a good afternoon. 1.25% lower. Is there more in store?
A very not good afternoon, Neeraj. But you're right. I think we spoke something like this last week. Spoke to Devina about the range expanding, 11.6 breaking. I don't think it's over yet. I think we are the only.
Yeah, you've given us strangle.
Yes, and yeah. She also asked me why I'm, not selling a straddle. Simply because the range was going to expand. That's what's happening. 11.8 is sacrosanct, Neeraj. I don't think that gets taken out this month. There's significant writing at 11.5 and 11.4. Now that is the only reason we are hanging on to 11,400. The bank Nifty might give an unlikely recovery, but whether it gives or doesn't give, I think we are heading towards 26.8 as far as the bank Nifty is concerned. I still feel there could be one more to 27.5. And as far as the Nifty is concerned, once again, we might see a small recovery, and once again, we are seeing around 46 lakh 38,000 as far as 11.5 put is concerned, and 45 lakh 90,000 as far as 11.4 put is concerned. That's the only. This has to give way. I think we are heading towards 11.3, but I don't think it's going to happen at the first attempt, and it's not going to be easy because these guys are stubborn, and 11.4 is holding rock solid. If that gives way, I think we'll go like this.
So what are you doing as a trade right now?
Actually, I had a call to sell the 11,900 call option. I was frankly speaking thinking we'd see a bounce back coming in. That's not coming in. So at this stage, I wouldn't short.
But isn't that too out of the money right now?
Yeah, but frankly speaking, Devina, I thought we'd see something closer to 11,600. So that's not happened, and so I won't short at this point, no, because I think the bank Nifty might give us a very unlikely 500-point bounce from here.
Okay. What about stocks? What are you doing on individual names?
Okay, in terms of individual stocks, Tata Motors is looking good. We've posted an intermediate bottom. We've posted rounding bottom, possibly inverted head and shoulder. So that looks interesting. Buy at 277, 273, target 286. But frankly speaking, I don't think one should bottom fish in a dicey market. The other one is DLF. Devina, DLF looks like a sell to me, and so sell in DLF at around 206, stop loss 210, target 198. I mean, whole right from you have stocks like Escorts, Jubilant Foodworks, Hindustan Unilever, all are shorts, but not without a bounce.
All right. Sumeet Bagadia of Choice Broking is also joining us on the show right now. Sumeet, what are you doing in this market?
Hi, good afternoon. Well, see, markets are showing weakness. Nifty, Bank Nifty, both are down. Nifty, it's below 11,450 levels, which is again a negative sign for the index. There is a possibility that some more downside can be seen. And in next couple of days, there is a possibility that we might see fall till 11,350 levels. I think for a trading perspective, it's better to be on sell side till the time upside levels are not taken away. 11,540 is a resistance on high side, so that should be the stop loss for selling positions. Till the time 11,540 is not taken away, one can initiate sell positions. Downside 11,400, 11,350 can be the targets for next couple of days. On the other side, Bank Nifty is also looking weak on charts, and from here on there is a possibility that we might see a fall till 27,000 or 26,800 levels. Those who have taken sell positions, they can hold on the existing sell positions with a stop loss to be placed at 27,400 levels on high side, for the downside target of 26,800 levels.
Okay, that's a call on the Bank Nifty and the Nifty. Your stock ideas, Sumeet, HCL Tech, and you're selling LIC.
Perfect. We are buying HCL Tech. IT stocks are showing some strength, and HCL Tech is looking good to me. It's quoting at around 1088 levels. I think one can initiate long positions with a small stop loss of around 1078 levels on lower side for the upside target of 1110 and 1120 levels. The second stock for the day is LIC Housing Finance, and that is looking weak on charts. It can give a fall. Stock is looking weak on charts. There is a possibility that we might see a fall till 470 levels. This is a trading call for next 2 to 3 days time horizon. One can initiate sell positions at the current market price 488. If there is a pullback of around 2 to 3 points from present levels, then that should be used as a selling opportunity. Stop loss to be placed at around 497 levels on the higher side for the downside target of 475 and 470 levels.
Okay, stay on, gentlemen. So much more to talk about. Let's get in a fundamental voice on the show. Sanjiv Bhasin of IIFL joining us on the show. Sanjiv, good having you. Thanks so much for joining in. It's an interesting market, Sanjiv. The stronger hands have started correcting. If it was the consumer names the other week, Bajaj Twins are right up there in terms of course correction today. And IT and pharma, which were, at least pharma, which was not doing anything until 2 months ago, is suddenly the toast of town. How are you viewing the current market mood?
Yeah, right. So you have actually hit the nail on the head. The erstwhile leaders of the bull market are now turning very, very hostile. So whether it's a Hindustan Lever or a Jubilant or a Bajaj Twins, and rightly so, the valuations look stressed. But it's telling you that the broader market is looking very, very good, and any correction there is a buying opportunity. Now you've seen the likes of the ADAG group come out of hibernation after they've cleansed their balance sheet, they've reduced their debt, and that seems to be the cue that buy more industrials, more infrastructure plays which are very, very positive. So we've been contrarian on pharma and have richly been rewarded. We still think that 2019 will belong to pharma, insurance and power. These three are our dog horse sectors, and we continue to be buying those stocks on any decline. As far as the Nifty goes, I think 11,250 to 11,650 is the range, and it needs to spend some time there given the quirkiness of the macros of rupee, oil and bond yields.
Sanjiv, good afternoon. Devina here. Looks like you're in favor of autos this time around. You like a Bajaj Auto and a Tata Motors. Can you tell us why?
Correct. So we think Bajaj Auto has weathered the storm, and they are now sacrificing part margins to get more market share. But the icing on the cake is the government move on the three-wheeler side, in which it has a relative monopoly, and we think electric vehicles and the exemption given on three-wheelers should be a much needed kicker. Bajaj Auto may have weathered the storm well, and like we said, in the next 2 quarters you could still see some margin contraction. But going ahead, we think given the weakness of the rupee, Bajaj Auto is one of the best exporters in the subcontinent, and that should be another tailwind for that. So we are very bullish on that in the two-wheeler space. Tata Motor, like we said, that it was a no-brainer closer to 255, but it has been cheap. Now, however, the real game changer will be the electric vehicle pursuit from the Europe to America, and that is what is going to take on the likes of Tesla. Secondly, their local CV sales have shown extremely good numbers, and we think the Slovakia unit will again add on to the volume pressure, volume numbers from end of September onward. Sum of parts, we think Tata Motors is ripe for another 20% upside by the end of the year.
All right, that's a call on the auto space, Bajaj Auto and Tata Motors. Sanjiv, anything that you're liking in the NBFC space right now? Because we've spoken a lot about how the corporate-facing banks, have been the flavor so far. PSUs obviously not so much, but NBFC is also slightly more stretched on the valuation side.
Yeah, so two names which come readily and which we are, buying on declines, and we've started initiating. L&T Finance, we think numbers were way ahead of the street. And even though bonds yields are showing 8.13, we think that's a temporary phenomena. Their book has been extremely well mixed, and asset quality has been on a much year-end low. So I think L&T Finance fits the bill perfectly for NBFC, and we are putting our money on Equitas. Equitas has been one of our long-standing stocks. It's underperformed, but the last 2 quarters have been a game changer. And we think that in the microfinance scheduled bank NBFC space has a very good risk reward for a 30% upside. At 150, I would be very, very bullish on Equitas, given the management guidance and the book ahead, which they are telling is going to grow at almost 30% for the next 2-3 years.
Interesting. Sanjiv, there's a query that talks about something that I would want to ask you as well. Quality names getting beaten down since we're talking about NBFCs. What to do with the Bajaj twins? Arguably, both of them have corrected 10%. Bajaj Finance almost nudged the levels of 3,000 before correcting to 2,632. Could there be more because the valuations are steep, or would you use dips into such quality names to increase or make fresh investments?
Yeah, so there is no question about the management and the pedigree of the company, and we still think if you are playing the insurance, then Bajaj Finserv fits that bill perfectly, and a 10% correction would be very, very healthy. But like I said, people are, the smart money is actually moving out of erstwhile blue chips and getting into more slightly more higher delta plays. That's why we suggested those two names. But definitely at these levels, you should be buying both the Bajaj twins and trying to make a sip at least for the next 6, 8, 16 weeks. So on a weekly basis, if you bought it, you will make a good base, and then 2019 actually could see them come back very, very strongly. So this may be a temporary hiatus, but right now they are seeing selling on any rally, and rightly so. That is why the Nifty is actually going to find it tough to scale new highs.
Okay. Let's find out what's been happening in Hathaway. And Hemen, the stock for the last 2 or 3 trading sessions has been on a tear. Friday session, the stock was up 9%. Today, again, the stock is up about 8.5%. Any technical barriers that it's breached in the upside indicating a positive move?
Yeah, actually, 22.5 was a small intermediate high Devina posted on 10th August. Now we've closed above that. We've closed above the 55-day exponential moving average. Weekly indicator like the MACD has signaled a buy. So, frankly speaking, we're in a corrective bounce. I'm not sure if this is a trend reversal yet. But yeah, we're in a recovery and not a rally. Some more upside seems to be there. I think we'll come to a shuddering halt at around 29. I don't see upside above 29, Devina.
And the Suven Life, that's also another big mover in terms of just the pricing interest and the pricing action that's been evident in the stock over the last 7 days.
Suven is going to 400. It was one of my Diwali picks on the same channel. Okay. We moved sideways, made a rounding bottom between 150 and 230 for almost a year. The entire pharma pack has been a favorite for quite some time, and Suven is not an exception. The earlier high was around 335, Devina. So in the near term, yeah, there could be some turbulences, there could be some headwinds, but we are heading towards 340 and 400 over the longer term, and it looks good. In fact, every pharma stock worth a pharma name is looking good for the next couple of years, in fact.
No. Okay. So those are stocks which are doing well. What are not doing well is the other question, right, today. There are a couple of queries for Sanjiv Bhasin which we'll ask him about, but just before we do that, just trying to see what's not doing well. Shankara Building Products should come up on your screen. It's down today and down for the 5th or the 6th trading session now. That's 4.5% downtick today. Just look at the last 7 days chart and you will see what I'm talking about. Look at that fall that's come into Shankara Building Products. And remember, this was a strong stock. It's seen levels northwards of 2,000. A lot of people like the business model that they are in. The growth numbers that the management has posted or spoken about almost at the end of every single quarter are very strong. Somehow this meltdown is leading to a bit of a carnage into companies which were showing signs of growth as well. Sanjiv Bhasin, Shankara Building Products individually.
So I think I've not tracked that for some time, but I think again these are proxy to growth on the capex expansion, and you know these stocks have been relatively doing well. We still think that the capex expansion is definitely on the cards, and that's why you know some of the power plays, particularly the infra plays like ABB, Siemens are looking very good. Larsen & Toubro itself has indicated a very strong book on both the hydrocarbon and on the petrochemical side. So Shankara Builder is something I have not tracked. It's a mid-cap and it may have been underperforming right now, but that's partly due to the market sell-off which you are seeing. You know, Neeraj, just to take another minute, I've been very bullish on some of the power financiers and been a little contrarian. 75 on PFC and 100 on REC, and those stocks have been doing extremely well in the recent past, but I still think there is another 40% upside in both those stocks in 2019. We think all the power woes are behind, and as soon as you get more settlements and now the NCLT, you will see a very smooth uptick. 8.5%, 9% is the dividend yield in both of them, and I still think that on declines you should add those to your kitty. We are extremely bullish on power in 2019.
So you bullish both on PFC, REC, or would you take one over the other, Sanjiv?
Both PFC, REC, CG Power, Adani Power. Adani Power was my top pick at 22. CG Power at this 55, 56. Don't neglect these stocks. These could be huge wealth creators. And you know, most of the weaknesses due to asset quality and higher yields is already priced in. So I would look at 125 in the next 1 year on PFC and 165 on REC.
So Sanjiv is not just bullish on the power financiers, but the power generation companies as well. It's a risky pocket, isn't it, Sanjiv? I mean, the kind of debt levels that, say, for example, an Adani Power is sitting at, almost everybody speaks about that being the rotten apple or the slightly tougher baby within that whole group, and you're betting on that one as your top idea.
Correct. So 22 is almost 32, and I'm not saying buy it now, but make a sip, because that stock will be 50. It's recently also acquired the generation company from BSES or Reliance Infra, and we think power, most of the woes are behind us. If I go and meet the local, you know, the local DISCOM, they are going to declare a dividend because T&D losses according to them, is at the lowest they've seen in 16 years. So you know, most of the noise and the rhetoric is all on the paper. On the ground level, power is in surplus, and that power surplus equation may not remain for long. So power prices are definitely headed higher, and we think recoveries and you know, asset quality improvement over a period of time is definitely on the card. Valuations are very, very attractive. So yes, it's a little bit of a risky bet, but at 11,500 you want slightly more higher beta than the normal 50 times levers of the world.
All right, gentlemen, just stay on with us. You know, time to bring in our chart of the day. Money and equity markets have generally and usually gone hand in hand. If one falls, so does the other. But the trend seems to be changing now. And we've got Chadha Babla who's joining us with details on how that's unwinding. Chadha, tell us.
Well, so we looked at Nifty's performance during the previous instances of significant rupee depreciation, and here is what we found. Now, in the past decade, a Nifty correction has followed sharp rupee depreciation. So let's look at past instances of INR depreciation against the dollar and see how the equity markets had reacted then. Now, from April 17th, 2008 to Feb 2009, which is sometime around the subprime crisis, the Indian rupee, which is the blue line, had depreciated by 28%, and correspondingly the Nifty had corrected by about 43%. Now, in the second instance, from August 2011 to about June 2012, when the rupee depreciated by 26%, Nifty had corrected by 12%. In the third instance, and I'm talking about the Jan to August 2013 period, rupee corrected by 20% and Nifty by a smaller 8%. In the fourth instance, that is from Jan 2015 to about Feb 2016, the rupee corrected by 8% and Nifty by a sharper 17%. Now, in 2018 so far till Friday, and I'm talking about the fifth box that you can see, the Indian rupee has depreciated by about 12% against the US dollar. However, in a reversal of trends, the Nifty has given a positive return of 10%. So in line with the past trends, is a Nifty correction due? That's today's chart of the day.
All right, Shraddha, thanks a lot. Well, that's the question. I mean, that's what baffles everyone, is how the Indian stock markets probably is bucking the trend from various parameters. Like Shraddha pointed out, that while the currency depreciated, the markets generally, you know, free-falled along with the currency, but that's not happening now. When emerging markets as a basket used to correct in previous periods, India was a part of that, used to align itself with that. But now it's obviously the big divergence that's coming about. So, and you know, it's also the fact that we're not seeing great macro indicators that are coming in. So what's actually causing this interest within our markets?
Yeah.
Domestic, and how big a way is domestic supporting you know, the indices?
Yeah, so I mean, you can look at it in two ways. One is that there was a bit of a correction before the rupee fall started, which is post Jan 31st, Feb to April or thereabouts, a bit of a correction that had happened because Indian markets were not exactly top of the charts when they were moving around then. So the gains, the YTD gains that we're seeing are also a result of the upticks that we've seen after the bit of a fall that the Indian markets had in the period of February to April. And two, the micro has finally started to reverse, right? The first time we've seen in a number of quarters that the quarterly earning picture has looked strong. Maybe the world market's doing
GDP
well.
also, I mean, where do you find a country which
and the world markets are doing well,
yeah.
right? I mean, the US markets are, the world US markets are doing well, and the mother market is doing so well. I think.
But so the funny part is that while US is doing what it's doing, its economy is picking up, growth rates are becoming stronger. The safer haven money now starts moving back there as compared to earlier on, where there was a proper dedication and allocation to emerging market funds, equity funds, which is not happening now. So most of the money is back in the US. And for us, even with the minuscule amount of money that we have in terms of foreign investors, we're still okay.
Yeah, I think the DI money flow too, as you said, is probably helping this case out. Well, good going. Let's wait and watch for how long does it last. For now, under a bit of pressure, but this may not really necessarily last too much. Okay, just before we take a break and in fact make you hear things about the currency, you know, Sanjiv, there's a question that a gentleman is persistently asking for you, and therefore I want to bring it to your notice. The gentleman wants to know if you track some of these holding companies, we spoke about Bajaj Finserv earlier. He's talking about smaller names, BF Investment, Kalyani Investment, maybe a Maharashtra Scooter, and wanting to know if you have any views on these holding companies. Do you have thoughts here?
Well, yes, I think you've seen all of them trade at a historical discount, and generally when that discount reaches such levels, that's the best time to buy it. So whether it's a AB Capital or a or a Grasim, which is the holding company of Ultratech, and the names which you've suggested, I think there is a lot of prudence, because the names you've suggested are all very, very able and proven leaders in their businesses. And let's not look at the next fortnight or the next 2 months. The next 3, 4, 5 years are extremely bullish, and that's why I'm amazed everyone comes and doubts why the Indian markets are not falling. I've not heard anybody give a word of praise that India is outperforming, and rightly so. Everyone was chasing China for the first 6 months. China itself is in a bear market, so look for the credence of India outperforming, which can continue. And once you are through this hiatus of rupee and the dollar equation, I think we'll be up and running because of earnings and other macros. So yes, that holding company discount seems to be at a proverbial high when markets are under weakness mode, and that's the time you should actually be looking to buy those, because over a period of time definitely there will be more encashment, and as the parent, the subsidiaries do well, the parent holding company will definitely see an upside over a period of time.
Okay, got that. I want to go to Sumeet with some chart checks on Reliance Industries. Sumeet, what's the take here? What are the levels one should track?
Let's say Reliance Industry, overall the stock is looking very good on charts. It has given a one-way move, and now looking at the chart, it seems that the stock is supported around 12.8, 12.10 levels. At the same time, it has resistance, immediate resistance is placed at around 12.80 levels, and once 12.80 is taken away, we will see a move till 13.20 levels. I think if there is any dip of around 10 to 20 points from present levels, then that should be used as a buying opportunity. One can hold on the existing long positions. Downside, one can maintain stop loss of around 12.10 for the upside target of 12.80 and 13.20 levels.
Anything on the oil marketing basket, an IOC, BPCL, an HPCL?
Well, they are looking weak on charts. They have given a breakdown. It seems that the more downside is left in all these stocks. I think it's better to avoid long positions, and if anyone wants to initiate a trade, then that should be on sell side. One can initiate sell position in HPCL at 247 immediately. 3 days before 3 days, it has taken support at around 244 levels. Once the level is taken away at 244, then there is a possibility that we might see a fall till 238 or 235 levels. So it's better to avoid long positions, and one can initiate sell positions with the stop loss to be placed at 252 on higher side for the downside target of 238 and 235 levels.
Okay, got that. So not too gung-ho on the oil marketing pack. Sanjiv, one last question before we let you go this afternoon. Anything that you're finding risky, you want to stay out of?
Well, the whole market is looking slightly stressed, but the catch is that you have to be in convincing sectors and buy the stocks which are which you think in the next 6, 9, 12 months, 2 years are going to be exceptional performers. And that's where we said insurance, power and pharma. Yes, we think some of the consumption high-flying names we are not going to buy on declines. For us, if we had to buy 3 consumption names, it would be ITC, Nestle and Dabur in that order. But we would avoid the other, the names which have actually corrected more than the market. So for us, Lever and a Jubilant Food would be avoid. Similar would be the case of some of the erstwhile NBFCs again, where the HDFC twins, we are also trying to avoid those. Even though HDFC Bank has seen almost 12% correction, we don't want to buy that. We would rather buy some of the corporate facing lenders where we think the visibility and the earnings should surprise on the upside.
Got that. Sanjiv, we'll leave it at that. Thanks very much for taking out the time and speaking to us, and hope to see you more often on the show. All right, for the markets then, like we highlighted, it's been a weekday's trade, and the second half of trade in particular has been a clear slide down. We're now convincingly below that 11,500 mark. given up 144 points in the Nifty. The Sensex also looking weak, and the banks are giving way as well in today's session. So the bank Nifty down by almost 1%, 273 points given up. But let's slip into a short break, and as we slip into that break, former RBI Governor Y.V. Reddy has cautioned on the risks of the government officials commenting on the exchange rate. In a conversation with Ira Duggal, Reddy noted that the government's job is to prescribe the market rate regime and not try and fix the interest rate. Here are a small slice of that conversation.
I don't know exactly. In fact, when I was governor, when somebody asked me, what is the right exchange rate right? So I said, I don't know. And I said that I cannot define God, but I can recognize devil. When I see the devil, I'll intervene. Anyway, now let me come to the system. I think there's a systemic issue here, systemic issue. There should be an understanding of the relative roles, I believe. And my understanding of the situation is that exchange rate regime is prescribed by the government. Regime, what regime do you follow? The market determined exchange rate, etc., the whole regime. The exchange rate is managed by the Reserve Bank of India, and I think that relative roles have been respected by and large. There are occasions when in the past, once or twice it happened. If I am not mistaken, when earlier NDA government was taking over, there was a political belief that was expressed in favor of strong rupee. At that time, my recollection is Dr. Jalan went to the Prime Minister and met the cabinet, virtually said that it is better you don't express opinions there. And I think when I was in the government before also, and I was dealing with BOP, I think our dharma was to make sure if any message has to be given about exchange rate, it can at best be given to political leadership, but not bureaucracy or professionals, because vis-a-vis RBI, the bureaucracy or professionals cannot have a say on these matters. So I think that was the broad discipline that we followed, because the markets get confused signals if they come from different sources, and it is so deep and so real-time things happening, and that can be understood only if you are in the sitting with the screen in the dealing room, virtually attending to it exclusively. Whereas I think Government of India has many responsibilities, and I think they should they have to take care of many things also. So this requires a level of attention to detail and sensitive to markets that I would be inclined to leave it to a little more professional group.
Okay, but you know, the current comments that have been coming out, Dr. Reddy, has been about how a weaker rupee benefits the Indian economy. That has negative implications to the extent, even if it is factually true or analytically true, it can feed into the market and then have a detrimental impact?
No, my limited point is, if an opinion is expressed somewhat in that direction, it should be with an intent, unless you want to influence the markets. If you want depreciation, and if that is a decision, let us take Goa speech. When I gave the Goa speech in 1997, we wanted the rupee to depreciate. And after discussing with the government, we chose that mechanism to do it. So you don't just make the statement. So that's my problem, in the sense, if I have too many statements from too many institutions, from too many people, and the main institution responsible is RBI, it's a sensitive matter, that confuses the issue. So that is all. And whether it is weak or strong, whether it's good or bad, that is a matter on which it's not entirely, we are not in a planning era where I can determine what rupee value is good for me or good for the economy. We still have to recognize the markets. It's a market determined exchange rate in which we may be able to influence to some extent. So, you cannot take a unilateral view about what's the correct rate. And in any case, dealing with the market, I think in the exchange market, in the exchange rate, is in the interests of the system that there should be one institution which articulates the exchange rate management aspects.
That being the RBI.
I think that is wise, unless the responsibility is taken away, which I don't think is the intention.
Good news, got a promotion and a damn good raise.
Congrats, beta.
वाह, raise? अब तो insurance policy ले ले.
कौन सी कंपनी से लूं?
Choose वही जिस पर हो पूरा भरोसा.
That's good. But आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC. Trending with times. 62 सालों से हर generation की पसंद.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are not different, they are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
September 15th, 2008. The day a titan of the investment banking world fell. An event so unlikely that when it happened, it shook the world economy. 10 years later, the world has picked up the pieces. Or has it? Bloomberg Quint looks back at the collapse of Lehman, its aftermath on India, and the recovery that followed. Lehman, a decade later.
Kerala is tiding over the worst calamity that the state faced in a century. The intensity of the calamity and the losses suffered thereby are unparalleled. A preliminary assessment pegs the loss at around of rupees 20,000 crores. It is a humongous task to undertake various tasks of rehabilitation and reconstruction. Only with the wholehearted support and cooperation of all of you, we can rebuild Kerala. Your contribution, however small, will go a long way in achieving this goal. Please contribute to the Chief Minister's Disaster Relief Fund. We shall overcome.
All right, 24 minutes left to go for market closing, and it looks like we're going to have a tepid close this afternoon. Last week had a negative close for the index after 6 weeks of positive gains, and it looks like the pessimism is seeped into today's session as well. So for the Nifty, we're down more than 1%. We've given up almost 139 points at last count, and the banks are also looking weak. 27,227 on the bank Nifty. Some stocks which are holding up in today's session, and yes, the bank is doing okay. On the index, Zeal is up about 0.5%. But remember, the quantum of cuts are much higher, outweigh the quantum of gains that we're seeing in a bunch of stocks like an Axis Bank, a Cipla, a Tata Motors, an HCL Tech, a Wipro. So, that's something to watch out for. The advanced decline ratio, the market breadth looks extremely weak. and that's been there probably since the start of the trading session. So you had the upper hand, the bears taking the upper hand right at the start of trade, declines of about 1,086 stocks versus advances of 487 stocks. But we'll get to that in a bit and talk about some more stocks. But in the meantime, let's find out what's made it to Yash Kapadia's Fab 4 list of stocks this afternoon. Yash, good afternoon to you.
Good afternoon, Devina. So even in a weak market like today's, RITES is holding up well. So it's up about 2.5–3% after the company received a huge 300 crore rupees order from the Ministry of Railways. Thyrocare is up about 4% after the company approved to buy back about 8.5 lakh shares, or about 15% equity, at a buyback price of 730 rupees per share, which is at a premium of 14% to its Friday's closing price. The company mentions that the promoters will not be taking part in the buyback, so that would increase their promoter holding in the company from 64% currently to about 65%. ICICI Lombard continues to go from strength to strength. It's up about 5% today. It's been gaining for the last 9 trading sessions and hit a fresh record high in today's day of trade as well. The last stock I want to highlight is Max Financial. It's up about 6% today. It has been gaining over the last 3 trading sessions and in fact had surged as much as 10% at the day's high today, gaining more than what it has in the last 4 months, with volumes too coming in significantly higher at almost 16 times the 20-day average. Back to you.
All right, Yash, thanks a lot for that. Those are the Fab 4 stocks that we just discussed. Gurmeet Chadha of Complete Circle Consultants is also joining us on the show right now. Gurmeet, good afternoon to you. What's it looking like? I mean, the day at least seems to be, slightly more disturbing in terms of the kind of pricing activity on the downside. But some say that probably use these dips to enter back into the market. Are you of that opinion, or you believe you still want to wait and watch for a few more days to see and to probably get a sense of what the exact trend is?
Yeah, hi. You rightly pointed out, I think this is, that's how the markets are. Markets, how quickly the sentiments change. I think we've been maintaining a view that, the markets are due for a consolidation. And I think, the intermittent volatility should be used, but you rightly pointed out, one should not be in a hurry. There are a few bright spots. If you see the GDP numbers, even if you look at it, excluding the government consumption, it's still grown at an impressive rate. We are seeing capacity utilization levels now at roughly about 75%. Historical evidence suggests that that's around 75–80 is when the capex starts, the private capex starts. So our sense is that you should use these intermittent volatility to add some quality names. We have a few up in the list, but at the same time, the risk reward is evenly balanced. We think that even the debt side probably offers similar returns on a risk-adjusted basis vis-a-vis equities. And by near term, I mean about, let's say, 8 to 12 months.
Gurmeet, by the way, just before we get back to the next question, I just want to mark that there are only 4 stocks on the Nifty now which are trading in the green. The rest of the pack is a deep red, 1.31, 151 points down. And save for HCL Tech and Axis Bank, there's not a single stock which is northwards of 1%. In fact, the losers have lost fast and steep. Bajaj Finance is down 4.5%, Sun Pharma about 3.5%, and commodity names too, the likes of Hindalco, etc., are all correcting quite strongly. Gurmeet, but when everybody is greedy, be fearful. When everybody is fearful, be greedy. Is it time to be selectively greedy in the oil marketing companies? The moats around the businesses stay. Crude is up, yes, will not be up for years altogether. HPCL is sub 250. That's a remarkable downtick for a stock which was trading substantially higher a few months ago. Are valuations pricing in a lot of negatives, or would you still be circumspect on the prospects of the OMCs?
Neeraj, I am in fact have a contrarian opinion on oil marketing companies, and I think if you see, despite all the pressures, I think we are seeing consecutive days of hike. We also saw consecutive days, 15 days of fall. So I think they're trying to evolve a process response to fuel and not really succumb to the pressure of this being an election year. And that gives me a bit of confidence. And you rightly pointed out, valuations are attractive, but I think a staggered approach would help, because state elections are around the corner, and there are 2 components. So you have the central excise and you have the state taxes. So one has to be a little careful. But the two names, one you rightly pointed out is HPCL. BPCL is another company, state-of-the-art marketing infrastructure. It's the only company in oil marketing space which has an ROC of more than 20%. So selectively staggered way of adding over the next 4 months probably could be a good call on the OMC space.
All right. Just pull up the open interest plate for the bank Nifty, because it seems like we're having some heavy futures and options activity out there, at least on the open interest side. 27% increment in open interest in a falling market for that one. Hemen, how do you read into this?
I think it qualifies as a contra buy. We've seen 4 lakh addition. Last settlement, Devina, I think we were around 29 lakh shares OI for the bank Nifty. We were at 14.5 lakhs on Friday. So if we've added 4 lakh OI at this level, I don't think it's a short position. If it is, we go 500 points in 2 days over here. I have a feeling it's a contra call, and I stick my neck out and say we're setting the stage for a 400 point bounce from here. Right now it looks unlikely, but 27% OI addition at this point, I think it's strange and it's something out of the ordinary. So I would take that, I would analyze that as a bullish call.
Okay, so Hemen taking a contra call here on the bank Nifty, saying that at these levels, 27,600 or 400 point bounce back is what you can see. What about Yes Bank? This is a stock which is holding up in today's session, and the open interest activity is also pretty strong on this one. 22% change in open interest.
In fact, Devina, Yes Bank added around 15-18% on Friday also. I think 316 for the intraday low. I have a feeling one can keep a stop loss at 300, take a contra call. We've come off from 404 to 316 in some 17 trading sessions. I think it's due and overdue for a bounce, a recovery, not a rally, but nevertheless. So once again, I'd go contra and go long on Yes Bank. For safety's sake, if you don't want to play that, one can sell the 280 put. I don't think that's coming, or one can buy the 340 or 350 call if you don't want to play the futures.
Sumeet, a mid-cap IT stock that I want you to come in on. It's been a consistent idea amongst everybody, finally starting to show its ways and trading at new highs, so that is persistent. And then the other one which is following suit is Mastech, which at 604 is trading at new highs. So both of these stocks have done very well. So if mid-cap IT is doing so well, could there be a trade taken in large-cap IT? Would you take a large-cap IT trade?
See, we have already given a buy call in HCL Tech. We feel that most of the IT stocks are looking good to me. I think if there is any dip or correction in large cap IT stocks, then that should be used as a buying opportunity. There is a possibility that some profit booking can be seen from present levels, but overall, if any such profit booking is seen in frontliner stocks like HCL Tech, Infosys, TCS, Wipro, then that should be used as a buying opportunity. For a time horizon of 3 to 6 months, if any dip is seen in any of the IT stocks, then that should be used as a buying opportunity. From here on, there is a possibility that we might see a move around 7 to 8% in the next couple of months. So overall, the bias is positive. Charts are looking strong. Charts are looking strong on the stocks which we have named like HCL Tech, TCS, Infosys, Wipro. So one can initiate long positions at current market price. If there is a dip of around 2 to 3%, then that should be used as a buying opportunity.
Persistent Systems is the other one at 886, that's trading at live highs for itself. Mastech at 604 is trading at 52-week highs or live highs for itself too. So select names within that mid-cap IT space doing okay. We have some ideas from Gurmeet, Chadha as well, and we'll take them in a bit. But first, it's time to take a look at what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, gentlemen. Darshan, let's start off with you first.
Yeah, so one of the stock that has actually risen significantly of late is Hawkins Cooker. It's the buzz of a potential stake sale that could happen. It's moved all the way from levels of 2,500 to almost 3,400 within a matter of weeks. So that's the buzz that we've picked up on Hawkins Cooker. The next one is Engineers India, trading rather flat in trade, but there's a buzz of a potential corporate announcement that could come in. It has significant amount of volumes today. 1.5 million shares have already been traded, not falling as much as the other companies in when the market is seeing a lot of falling. And Hexaware, again, you know, there is HNI accumulation that is happening in a rather weak market. The counter is up almost 2.5–3%. Has come off the day's high, but nevertheless there is active traction in Hexaware. But Yatin, what are you hearing?
A couple of stocks, especially, Arvind Limited, that is one stock wherein dealers are recommending a BTST strategy based on FNO trends. So this is one stock wherein dealers are expecting the uptrend to continue. Apart from that, we have, Equitas holding in. For that matter, the entire, case for Ujjivan, Equitas, the same business models are looking at some pressure points in trade today, almost 6% down for this one. Dealers do indicate that there is domestic fund selling in all of these small banks, which have recently come out with IPOs. And finally, SREI Infrastructure, that is one stock wherein on the back of HNI action, the stock is gaining almost 2.5% on decent volume of nearly 50 lakh shares in the cash market.
All right. Yatin, thanks a lot for that. So that's our channel checks from the dealing room and what they are saying. Gurmeet, just want to come to you on a WellSpan Corp. This stock has been up almost 30% in the last 3 months or so. What's the call here? Do you see them, being more, the likelihood of the stock going up further?
Hi. I would be a little, would wait and watch on it, considering the sharp run-up. I think the run-up happened because it has a huge order book. They have almost, 150 billion order book. They also got a 220 KMT, which is the welded specialized pipeline contract from US in oil and gas space. It's very difficult to give a long-term fundamental call on such stories because, things change very quickly in this space. But looks like if the order execution happens as the market expects and as the management expects, it could be a good 2-year, 3-year kind of addition to the portfolio. Considering the weakness in the market, it might just make sense to stagger it, but positive from a medium-term perspective on this particular stock.
Okay, interesting. WellSpan Corp, one of the recommendations. Gurmeet, interestingly, you are bullish on Hathaway. Now, the stock, as a stock too, of course, it's come off from those lows of 15 odd to 27. It's up about 16% today. So clearly out of distress. Yeah. And somehow the move in Hathaway has been slightly different than the move in Den, though even that is off the lows. But why a Hathaway when obituaries after obituary was written when Jio announced that measure to enter into the space that both of these companies are present in?
Dheeraj, I think the upside has got to do with the Netflix deal, where they will have a separate streaming of Netflix and a separate button on the 8 lakh Hathaway connections they have. I'm extremely positive on content creation in the digital space. We are seeing a huge shift in preferences in the way content is being watched, streamed, and deciphered. In fact, we are very positive, and we have been recommending people to even look at Netflix through the LRS route, which RBI allows, which is $2.5 lakh a year. So and I think this is one space which is basically an incremental addition to the market, in the sense the number of subscribers can go up from 8 lakh Hathaways to I don't know how much. That number could really multiply. So anything in content creation, in India, unfortunately, we have very limited space. We have the likes of Shimaru, Eros, which are basically recycling old content. It's not really new content being created. And so this tie-up with Netflix makes me very positive. I'll keep it under watch in terms of how it spans out. But if it really adds to their, the subscriber base, this could be a big delta creator.
Okay, so this could be interesting. Everybody's been talking about how OTT takes over and kills television. What if television brings OTT onto the TV, and what does that do? Well, it's clearly a bit of a spark for Hathaway Cable from 15 rupees to 27. Let's see if there's more in store. But it's a space that is clearly in the midst of disruption, whether they can ride through that disruption and whether this prices in the value. I think at about 17 or 18, the stock was trading at the valuation at which you would be acquiring a customer. The market cap divided by the customer was equal to the EV divided by the customer was the price at which you will have to pay to acquire a customer. So it was virtually trading at acquisition cost, which made it a very interesting bet. Then at 27, it's rallied a little bit, about 50% from those levels. let's see if there's more in store. Now, before we talk about this more, let's get in time now to get in closing strategies from our experts. Sumeet, Bagadia, to you first. Your top closing strategy.
Well, markets are showing signs of correction, so I think we should initiate sell positions at current market price, and the stock is Dabur. Dabur is looking STBT, it's quoting at around 450 levels, and one can initiate sell positions with the stop loss to be placed at 461 rupees on high side for the downside target of 440 and 435 levels. We can see these levels in next 1 or 2 days. At the same time, sugar stocks are looking good to me purely for a trading perspective. One can initiate long positions in Dhampur sugar at 91.50, 92 levels with a stop loss to be placed at 87, 88 levels on lower side for the upside target of 98 and 100 levels.
Hemen, what about you?
I'll have a BTST on Yes Bank.
Okay, levels?
We're at 323, so 4 rupee stop loss, 8 rupee target. 319 stop loss, 331 target.
Gurmeet, anything from a medium to long term perspective? I believe you like L&T Finance? L&T Tech.
Sorry,
L&T Tech.
L&T Infotech.
Yeah.
Yeah, L&T Tech. Reason being, they have had, almost deal wins across verticals. The recent one being in the aerospace vertical. Interestingly, out of 100 clients in the engineering and the R&D space, they have 48 out of them on board. Also, I think the entire tech space, this currency thing will add about 40 odd bips to the immediate margins for maybe this quarter and maybe something for the next quarter. And and L&T wants to have this strategy of divesting its and getting back to the core business. So it makes it an interesting play in the medium term. The other thing I like on a long-term basis is some of the corporate lenders, especially Axis Bank.
All right, Axis Bank. That's the stock that's holding up pretty steady in today's session. Last few minutes of trade left. We've got about 6 odd minutes left to go for trade. Anything on Axis Bank came in from a chart check point of view?
I think from a longer term point of view, it's one of the catch-up candidates, and we're at 650. I think we are heading towards 800 and more, but that's from a longer term point of view. Near term, I think we're done for the time being. We've seen a 3 crore cash market NSE volume, Devina. That is significant. We haven't seen this volume since 27th April. I think time being we seem to have stagnated. I would stay away from the stock. We walked in a corrective phase. I think we'll see 620 first. Right? It'll be a pleasant surprise if it runs away from there. I think we walked in a correction phase, and I think the whole month we're not going to see today's high.
Okay. Just before we get in closing comments, Gurmeet, my final question to you, and might sound like a broken record, but it's just the ferocity of the fall that we're seeing in Bajaj Finance individually. You've been a proponent of that business, and with fair reason. Is it now getting close to half decent valuations, or would you believe that some more correction is warranted before you can call this stock even remotely attractively valued?
I like that half decent valuation thing. I think Bajaj Twins. We are asking clients to add, with every fall, because and obviously it ran up from 1800 levels to almost 3000 levels. So the run up was also sharp. We like FinServ a little more at this level than Finance from a relative attractiveness. Reason being the which we discussed last time, that the FinServ has not exercised the call to increase stake, and now the stake would transfer at a market determined price, which could be both valuation additive and earning additive. One has to be a little cautious on the NBFC space for maybe a few weeks to a month, because the loan profile is changing towards more secured, lower yielding assets. The yields are going up. If you see today the repo rate and the 10-year, the benchmark, the spreads are almost to 2013 level. We have 150 basis point spread, which to me is also an opportunity to increase the treasury income. At the same time, there could be some more pressure with RBI trying to probably do another hike to contain the volatility in rupee. So maybe with a slightly lag of a month or so, you can start adding quality NBFC names.
Got that. Gurmeet, it was a pleasure having this chat with you. Thanks very much for joining in and sharing your views with us here on the show. We're about 3.5 minutes left to go from market closing, and it's been a sorry state for the markets this afternoon. Nifty Sensex down closer to the lowest point of the day. Neeraj is here wrapping it up for us. Neeraj.
Thanks for that, Devina. And of course, Devina will take you through all that's happened in the broader end of the spectrum as well. But about 1.5% lower for the Nifty Bank 2 ending close to or at the lowest point of the day, so not a happy hunting ground. Maybe the small cap index has done relatively better. The mid caps and the small caps will come up on your screen in just moments from now. The small cap index, when we started the show, had a tinge of green, but no, even that's gotten lost. Relatively better, you might add, compared to the mid caps, but about 1.35% lower, 2% lower for the mid cap index, and the market breadth would have looked abysmal as we end the day. Probably the worst market breadth during the course of the trading day today. What about specific stocks though? Let me talk about the large caps, and then Devina will bring you up to speed, as I said, with the mid caps and the small caps. Hardly any gainers. Look at that. The list has 7 names, and 4 or 5 of them, actually 6 of them, are less than 1% higher. So it's only HCL Tech, which is, well, about 1.5% higher. Axis Bank about 0.75% in the green, so that too has come off. The rest not worth talking about, but look at the losers. Bajaj Finance down 5%, Indiabulls Housing 4.5%, Finserv down about 4%, Sun Pharma 4%, M&M Financial 3.5%, BPCL about 3.5%. List is long, and the list of losers are strong. Very interesting in seeing the volumes today and the delivery percentages on some of these NBFCs in particular, as they brace themselves for some more cost of funding moving up over the course of the next few quarters. But it's not looked very good in the session today for the large caps. But Devina, the mid caps and the small caps too, worse off during the course of the show.
Well, no different, Neeraj, no different. You've got pain building across the board. And it's been a little bit more exaggerated for the mid caps and the small caps. So the mid cap index has been down about 1.9%. The small cap index, on the other hand, has been down by about 1.5% or so. Quickly looking at some stock movers. So one of the worst performing stocks out there, IIFL Transport, with what's been happening with regards to the RBI audit of IIFL. The stock's taken a knock of 13.5%. Other stocks losing out, Torrent Power and IIFL Holdings, Equitas Holdings. Remember, we had Yatin coming out and talking about the dealing room checks, talking about how domestic institutions are selling into a counter like Equitas. The stock has been down. It's down about 5% odd. You've got Varroc Engineering, Adani Enterprise, and some pain points in the power segment as a whole. So you've got the likes of an Adani Power, which has seen a dip of closer to about 4% odd. Kalpataru Power has seen another 4.5% odd cut coming there. However, within pain, there are a few bright spots, so just to enlist them for you, you've got a Max Finserv, which is doing okay for itself, about 7% odd higher. A Coffee Day on good volumes has seen an uptick of closer to about 5.5% odd, 313 on the counter. Hathaway, that's a stock that's been, the run has been almost uninterrupted in the last 3 days, 9%, and by the end of today's session, that stock is giving you a return of about 15%. Rights in the back of the railway order win of about 300 odd crores, it's up about 3.5%. You've got Mahindra CIE, and from the smaller tech names, you've got a Hexaware, which is doing okay for itself, and an NIIT Tech, which is also seeing the light of day by the end of today, about 2.5% odd on NIIT Tech.
Well, so on close, not a pretty picture, as Devina said. And let's bring up the statistics on the screen. This is, of course, what the markets have done, and ended about % lower for the bank, yes, but more so for the other indices. But the market breadth, I just want to pull that up. And yep, on expected lines, it's ended virtually at the worst point. It's a yawning gap right from the start of trade when you did see this crossover, and towards the end, there's no chance of it probably reversing, looking at the gap that you see. Yeah, 1:2 in favor of the declines, and firm 1:2, I might add. The turnover, Devina, should be interesting. Let's see the volumes today. Well, okay. The F&O turnover seems to be on the higher side. The cash market, actually, on the BSE cash, it's slightly more higher because it's closed at about 3,400 odd crores on the 5-day average. Today it's slightly higher, but NSE cash, on the other hand, which is around 34,000 odd, is about 33,000 in today's session. But yeah, on the futures and options side, you are seeing a heavy build up in terms of short positions across the board, and the turnover figure there is on the higher side. Yeah, I think Hemen was referring to some activity, and you and he were talking about the activity build up put. Yeah. And the call side as well, so that's interesting. And the contributors, well, Pittance really on the gaining side. You hardly have any performers save for Axis Bank, but the losing side and heavies, they've been out there. All the top 4 heavyweight stocks featuring on the losing side today.
Reliance 21 points, HDFC Twins 16 and 9 points respectively. So yeah, that's a big bummer.
Yeah, but it's not looking all that great. Let's see if it lasts or no. Just as we said, Europe is not doing all that bad. Keep in mind, the gentlemen and ladies, Europe is not doing all that poorly. The European indices were flattish when we started the show, and I reckon that they would be in or around those levels. So the world markets seem to be an okay place. We have problems of our own, because of which we have fallen thus thick and fast. Final thoughts and comments from our experts. Sumeet, Bagadia, to you first, very quickly. What levels are you watching out for immediately on the Nifty Bank?
11,500 can act as a resistance. So till, sorry, you asked about Nifty Bank. Nifty Bank is closed somewhere around 27,200 levels. Immediately on high side, it has resistance at around 27,400 levels. Till the time these levels are not taken away, it's better to be on sell side and on downside. 27,000 can be the immediate support, so that should be the first target, and if that is taken away, we can see a move till 26,800 levels also. So I think till the time 27,400 is not taken away, it's better to be on sell side.
Hemen, what about you?
I think the Bank Nifty is due for a corrective bounce, and finally the 27% OI we are looking at, finally they've been ended at around 19%. Even then, that's significant enough. We're at 27.2. I think 27,550, 27,600 seems like a possibility. Beyond that, I think we are heading towards 26,800 and 700. So I have a feel this is a corrective bounce, and markets are pretty oversold. Everything is ultra bearish. I think an unexpected recovery led by the Bank Nifty tomorrow seems to be in the offing.
Okay, gentlemen, thank you so much for joining in today and giving us your perspectives. Hemen, thanks a lot. Sumeet, thanks a lot as well. Just before we wrap up this piece of the coverage, the government is said to have asked the RBI to intervene more aggressively to try and control the drop in the rupee. Remember, Finance Ministry officials have put on a brave face thus far. In fact, speaking in favor of a weaker rupee, Anto Anthony of Bloomberg News joins us now with the details about what is it that the government is probably trying to do, if at all anything. Anto, would you reckon a matter of time before the North Bloc intervenes officially?
That's the sense that we are getting, Neeraj. So far, Finance Ministry officials and the government has put up a very brave face in terms of rupee depreciation. Now, last week, as we understand, they have communicated to RBI that they need to aggressively intervene in the market to support the local currency. Various steps which have always been in discussion, so they are again being brought back to the discussion table. Probably the NRI bonds would be something which we will have to look at. We also checked the oil marketing companies where there has been any communication from RBI regarding taking the dollar purchases off the market. So they pick up around 600 million USD from the market a day. From what we understand, they haven't heard anything from the RBI so far on this. So these are a couple of things which we could see in the next couple of days, some movement happening on that with central bank, with the North Bloc coming down strongly on central bank and requesting them to aggressively intervene. Probably we could see some action on the NRI bond trend, something on the dollar swap window, and probably we could see some more aggressive intervention by the central bank in onshore and offshore market.
But this is probably contrarian to what the RBI has done in the past, where they've said that they're not going to come and intervene to stabilize the currency at a particular level. They're just going to probably come in to stabilize the volatility in the currency.
So that was fine to a point. As you would have noticed, today the rupee has fallen to 70 to 67 against dollar, which is a very sharp depreciation. In the current month, in the last month itself, we would have seen about 5.5% depreciation. This kind of depreciation we haven't seen in a very long time. So also one thing that central bank has always maintained is that they don't want to target any particular level, but they want to target inflation. And that's what the central bank has been trying to do all the while. Even that matrix is going for a toss right now because the rupee depreciation is adding to the oil bill and fiscal deficit, and the inflation also is seeing a lot of upward pressure.
Well, Anto, good having you. Thanks much for taking the time out and speaking with us today. So, well, maybe some measures in store. Must have been Sajid Chinoy spoke in the morning. He was completely against the NRI bonds coming into play and the RBI coming in accepting that there is stress. But
whether or not they put good dollars to waste in a way if the rupee sees further pressure from here. that's something to watch out for as well.
Yeah, interesting times. Let's wait and watch if that happens or no. But we'll get to know about it when we get to know about it. For now, though, wrap it up on this leg of Countdown from Devina and me and the team that put this show together. Thanks so much for watching.